Hello, this is Mike Swanson of WallStreetWindow.com. I've got a very special guest with me today. I'm speaking with Jordan Roy-Byrne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, Mike. I'm great. Thanks so much for having me.
Well, it's good to talk with you, and it's a timely time to talk with you because you put up a real interesting article about what you see happening with gold, stocks, and then the week before you did one about gold. And I believe we're in a critical juncture. We saw gold go above 1,300 after the Federal Reserve had its last meeting. We're still above 1,300, but we've got real more important resistance at 1,350, I think. And, it's probably going to be once that's taken out that we start to see the small caps really start to move. They haven't done that yet. It's more a question, are we going to dip first or pause or go up through it, or what do you think's happening? And your charts can really guide us on this.
Well, I think there's so much to talk about, Mike, but right now, in the very short term, the question, and that's in my last article, key levels or key support levels, for the gold stocks. The real key or question during this little correction is, are we going to see the sector kind of consolidate in a bullish fashion where it just kind of trades in a tight sideways range without giving up most of the gains, staying fairly close to the recent highs. And I mean, after today, looking at the action today, this is Thursday, February 14th, we're speaking. GDX and GDXJ are showing a pretty good move today. GDXJ is holding up very strong during this little consolidation. So if the lows from today hold into next week, then I would lean towards, saying it looks like we're in a bullish consolidation. And, if a bullish consolidation continues, that would tell me that the market is setting up to for gold to rally up to 1350, 1360 again. And that for the gold stocks, for GDX and GDXJ, we could see on that move, GDX would probably rally up to around 25. GDXJ could get up to, 36, 37, maybe a little higher. So that's what I'm kind of looking for. I think the bigger question for me is I don't think we're going to see a massive breakout, that big sustainable move through the resistance in gold at 1360, 1370 until we see the S&P 500 roll over again and the Fed telegraph to the market that they're going to have to start cutting rates. Right now the market is pricing in a rate cut for 2020. If we see more weakness in the S&P 500 and these gains fade and it rolls over again, then the market would probably pull that rate cut, forward. And if we go back to the beginning of January, Mike, the market had a rate cut, a 46% chance of a rate cut priced in this year, 2019. So that tells me if we see that kind of weakness again in the S&P and it rolls over, that's going to be the fuel that really leads to this big breakout. And Mike, that's why I'm watching the gold to the S&P 500 ratio. For me, that is so critical for gold because the stock market has been strong, since 2009 really, and we need to see gold against the S&P really strengthen and really move higher. That ratio, that's really what I'm looking for, because when that happens, that'll be the tell that gold is ready to make this massive breakout.
Well, last year, when the stock market made its peak at the end of September, gold was trading sideways into that. And then when the market started to drop, gold started to go up, and gold became the best performing thing in the entire stock market, or the mining stocks did the best sector to be in from October till the end of the year. And they maintained the strength going into even today. And as we're speaking right now, if you look at where stocks were at the end of September, where gold stocks were at the end of September, gold stocks are vastly outperforming stocks like as Apple, stocks like as NVIDIA. All these popular fad stocks that so many people own have been left in the dust by the performance in the mining stocks, even though they don't excite people at the moment, and even though they're having a little bit of a pullback over the past week or two. This makes me think that like you're saying, the rollover whenever it does happen, the next one for the stock market probably will make the same thing happen again, generate another gold rally, more moves up, because it looks like gold, it might be something that can be defensive against the stock market when it drops.
Yeah, and when that happen, assuming that happens at some point this year, I think that's going to be the move in gold that just continues. Because what we've seen so often in gold and the gold stocks is, okay, in the first half of 2016, they were strong for 6 or 7 months. But other than that, they've never really rallied for more than like 3 or 4 months at a time. So that's all we've been getting in precious metals is a little bit of strength for a couple months, and then that's it. And the sector can't build on that strength. And so that's the question now: can we build on the strength that we've had in recent months? And again, as you point out, it's going to depend on when the stock market gets weak and rolls over again. And when that happens, you're going to see people shift more capital from stocks and into gold and gold stocks. It's not a question of if, it's just a question of when. And I mean, it's all linked together, Mike, because I don't know if I've mentioned this to your audience, but there's over the last 65 years, I've counted 13 times where the Fed has shifted policy, where they've shifted from hiking rates to cutting rates. And basically 11 out of those 13 times, when they've done that, the gold stocks have rallied an average of like about 180%, in the real massive gains were in the 1960s and 70s and the 2000s. And where we are here and now, given how long-term oversold we are, given where valuations are for the gold stocks, they're really in line with where they were in 2000 and 1960. So that tells me that, they're primed for a real significant, not just a rally, but a real significant bull market. And so the trigger for that is when the Fed starts cutting rates. And that's just, we're so close to that. We're waiting for that. And that's why when we see the stock market weaken and roll over again, the economic data is not looking good. It'll probably look worse. That'll be when we see, again, the Fed at that point, they're going to say, well, we got to think about cutting rates. And that's when you'll see more selling in stocks and, capital shifting into precious metals. And I know that the Fed has, their policy, Mike, is kind of, they've gone to a pause. They're talking about softer policy now, but not yet rate cuts. And so the market has benefited from that. But Mike, we shouldn't read much into that, because what happens in the economic and market cycle is when the market turns and it rolls over and the economy looks like it's going into a recession, that's when the Fed cuts rates. So when the Fed cuts, they usually cut rates as a bear market develops, as a bear market, matures. So the Fed, when they move to rate cuts, that's not going to be positive for the stock market. That's going to be negative for the stock market. So I mean, it's all linked together with Fed policy, the stock market, and gold. And, we've seen the Fed, they're basically in a pause mode now. When they move from a pause to actually cutting rates, that will be the beginning of the huge breakout in gold and a real bull market in precious metals.
Well, I'm looking right at the moment at the chart you put up the other day with the projection, the bullish scenario. And one of my favorite indicators is the 20-day Bollinger Bands. And they basically, if gold or the gold stocks were to sit here into March, those bands would squeeze together to signal some move in March that would match your projection. But so to me, it is what I see as a potential is lining up with your chart here, a potential start of a move in March. However, what would be the downside scenario if there isn't a breakout? What do you think would happen?
Well, I'll quickly say on the bullish scenario, the Bollinger Bands tightening, that goes along with the bullish scenario where the miners, GDX and GDXJ, where they consolidate in bullish fashion. They trade in a tight range, and, that gets the Bollinger Band squeezed. The negative scenario would be that this correction just, the lows that GDX and GDXJ traded at earlier today, the negative scenario would be that the miners go below those lows, and that, the bullish consolidation scenario goes out the window, and we see more of a, more of a retracement, more of a correction in the minors, and that would entail probably going back down to the 200-day moving average for both GDX and GDXJ. So that's kind of the negative, not a super bearish scenario per se, more of a scenario of, the market has kind of lost momentum and we're going to see, more of a correction in terms of price and time. More work has to be done. So down to the 200-day moving averages, that would be, my negative near-term scenario.
What would that mean for gold going down to 1280 or 1250 or something?
Probably at least 1280. I mean, the 200-day moving average for gold, I think, is around 1250. So I'm not, I guess I'm less keen on gold right now just because, as you know, Mike, having followed the sector for decades, you know that when you see the stock strengthen and start to outperform gold, that can be a sign of leadership. So that's why I'm watching the stocks a little bit more than gold. But gold did have a nice bounce today. So I think it's now twice in the last couple of weeks it's bounced from, 1,300 or thereabouts. So yeah, I would say, the negative scenario is probably gold testing 1280. Worst case, probably testing that 200-day down to 1250. But, gold has twice it's already held above 1,300. So if it can continue to do that for another week, that would be really encouraging.
Yeah, I mean, in some ways, I would say that so far this month, the action has been entirely consistent with a simple consolidation, prelude to a breakout. But we'll see. So far, what as you said, let's give it see what happens another week or two, right? So, but very well. I don't have any more thoughts myself. Do you? Do you have anything you think that should be said before we take off?
I would say not really. I mean, I would say, look, people, just be patient if you're invested in precious metals or you're thinking about getting in. Whenever gold makes this massive breakout, and it is coming, whether it's a couple months or it takes another year, just be patient and know that, when the breakout comes, there's going to be plenty of time to get in and make a lot of money. So don't panic. Don't worry about it, because when the breakout comes, we're going to see a strong move last for at least a couple years, and there's going to be plenty of time to get in and make a lot of money.
Well, for anyone listening to this video on YouTube, subscribe to my YouTube channel so you'll get the next video update, and go to thedailygold.com. That's George's website. He's got a free email list. You'll get his free updates, his articles that he puts out, and so forth. And thanks for taking the time to talk with me and everyone, out there on my list and my website and also in YouTube world.
Thank you, Mike. My pleasure.